Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined today by James Meyler. James is the CEO of ORIX Aviation, and he is joining us for the purposes of our Aviation Leaders Report 2022. James, I should say we are recording this interview 11 days before Christmas, so thanks for joining us today. And James, before we get into the meat of the questions, maybe tell our watchers and listeners, most of whom will know, a little bit about ORIX Aviation.
Thanks, Joe. ORIX Aviation, we have a fleet of over 230 aircraft. We're based in Dublin, owned by ORIX Corporation, where we've been in existence in Ireland for just over 30 years. And ORIX Corporation has been involved in aviation for over 45 years. We are a specialist asset manager, trading company, but also have a significant owned book. And we own a 30% stake in Avalon as well.
Thanks, James. And James, obviously with that breadth of customer base, can you just talk us through what you've seen, how customer performance on the airline side has evolved over the course of 2021?
Yeah, I think it's been very much linked to a combination of factors. One, obviously, being essentially the vaccination rates in countries. So the ability for airlines to have passengers travel, therefore their cash flows and the ability to pay. Also, to a certain degree, maybe a little less so in 2021 than it was in later parts of 2020, is the government supports that have been available in the US market and the European market has really benefited from the government financial supports, whereas obviously we've seen the Asian market generally in certain parts of South America really haven't had those supports. So that's affected airlines' ability to pay bills basically because they haven't had the cash flows from flying. But also I think as vaccination rates really expanded, those airlines that were able to fly people were able to pay the rent, and those that weren't have had difficulties.
And your outlook as you move into 2022. So we've talked about these green shoots of recovery, and you can point to pockets of the world, and probably in large pockets of the world as the year progressed, where air travel has returned in a real and meaningful way. How do you see that playing out over the course of 22?
Yeah, I think it's going to be a little bit stop-start as it has been. Obviously, the latest Omicron variant has caused countries around the world to reintroduce at least some levels of restrictions, not the same levels as before, but greater testing and the like, which has put people off traveling. And many government recommendations have been to avoid travel, home for Christmas holidays and the like. So that certainly has definitely reduced the forward bookings that the airlines had seen really kind of recover strongly in the autumn, have spluttered to a large extent over the last 3 or 4 weeks. I imagine the same. We're probably going to have a difficult January, February as after holidays and the like, the kind of case numbers increase again, maybe some level of restrictions. And then hopefully as we get into the kind of the springtime, at least in Europe and the US, you get back to kind of the growth that was returning last summer. And then hopefully in Asian countries, they actually start to have the first level of opening really that we had in the West almost a year ago. So I think you're starting to see that in many of the Southeast Asian countries that they've now are reaching vaccination rates that are going to be at a level that can allow them to kind of permit international travel again. And hopefully in places like Japan and the like, you'll start to see international travel being allowed again by springtime.
And looking maybe more specifically at your business in the world of leasing, there has been a remarkable resilience of lessors to weather the storm that the pandemic has brought. And there would be some schools of thought that this will give rise to a meaningful and long-term shift in the popularity and use of leasing as a source of financing for aircraft. What are your thoughts on that? And can I ask as well, if you think about percentages, we talked about that 50% barrier for a long period of time. Where do you think that's heading, and where do you think it's sustainable?
Yeah, I think if you'd asked me this question 2 years ago, pre-COVID, I would have said that actually we may level off at around 50% of the world's fleet being leased, whereas what we're seeing now is the market essentially, because of COVID, airlines' own financial strength has diminished to a certain amount that either their balance sheets have been harmed, and the kind of either the level of debt they've taken on, the government repayments that have been required, and with that, they're going to look to leasing more. So now I think actually it's going to head probably rapidly to 60% over the next 2 to 3 years, because most of the airlines' order books over the next 2 or 3 years, I think, are going to be financed by sale and leasebacks. The question around sustainability is probably an interesting one, because if you look at the order books of the manufacturers, the lessors really only still account for 20-25% of the order books. So to maintain it at a 60% level, the vast majority of the deliveries to airlines are going to need to be sale and leaseback for many years to come. And I think what we've seen over the various cycles is that when airlines are kind of having a good run financially and profitability and have a lot of spare cash flow, or able to access debt cheaper, they tend to finance at least 50% or more rather than do the leasing channel. When there's financial difficulties, they move to the leasing channel. So I think maybe in 3 or 4 years' time, when the airlines are back kind of hopefully in a sustainable profit level for a number of years, they may shift back a bit. So my guess is probably it stabilizes at 60% over a long-term period. But there's also a school of thought out there that really, should airlines own any aircraft? If you look at the largest hotel chains in the world, they don't own any hotels. They operate them, and maybe there's an element of the same, that airlines should operate aircraft and lessors should own them.
And that the environment then, what we've seen around lessors is, I mentioned that resilience piece, but it's also stayed very, very competitive. And we can talk to the funding piece in a moment. But what are you seeing on the challenges from a pricing perspective and an opportunities perspective? Have you seen any material difference probably around lease rate factors pre and post COVID? And then the second, are you seeing airlines differentiate on more than price? So we've talked before about kind of the quality of a platform and the strength of relationships they've built with leasing partners. What are you seeing in those areas?
Yeah, I think it very much depends on where in the space that you are. Obviously, essentially the blue chip airlines that have been able to weather the storm, either because of the size of their balance sheets, the government supports they have been given, there's a lot of competition for those airlines, certainly for both sale and leaseback and placements. But there are also a lot of airlines out there who are struggling. They're either going through bankruptcy, restructuring, or they have kind of asked for multiple deferrals from their lease payments, and they kept kind of hoping for the best, essentially, that they'd be able to restart. But as various restrictions have continued in their countries, they've been pushing out further and further. Those airlines are finding it very difficult to get any sort of leasing done, whether it's sale and leasebacks or new placements, because of their credit position. And also you see a situation where the market has been difficult for kind of older or midlife aircraft, especially wide-body aircraft, if they've come out of a bankruptcy position or have come off lease naturally. There's limited demand for those aircraft, and therefore people have had to be creative, either in terms of power by the hour rates, or indeed looking to park those aircraft waiting for a market recovery. So it's kind of, I don't think there's a kind of a blanket competitive nature and everybody's doing well. I think it really just depends on the kind of the credit quality or credit position of the airlines. And I think that's something that is going to continue for the foreseeable future, that the airlines that are doing well will continue to have availability of very cheap funding, but the airlines that are continuing to struggle will actually really struggle, because the airlines or lessors' patience around the deferrals and forbearance can only go on really for so long.
And moving to maybe the debt and capital markets, looking at it from the lessor perspective, and maybe taking the debt capital markets first, we've seen the ability of the IG rated lessors, and obviously you can see this very closely with your Avalon stake, the ability to raise unsecured debt at pretty phenomenal rates has persisted, particularly through the course of 2021. Do you see that continuing for the foreseeable? I know it's linked to the wider macro environment, but what are your thoughts on where that's going, and what are your thoughts about what that speaks to around the sophistication and the market confidence in the business model?
Yeah, I think it's been a real testament to the stability of the aircraft leasing platforms that they have been able to continue to raise debts at competitive rates. But I think that's also been linked to the fact that they've been able to, even with various difficulties, the diversification of their fleets, their customer bases, that even with difficult situations, they've been able to maintain cash flows to service debt, to continue the business. I think we've seen the rating agencies even this week. I think Moody's has now upgraded the aircraft leasing sector back to positive. So initially in COVID, it moved the sector to negative, then it went to neutral, I think in the summer of last year, and now they've moved it back to positive because they've actually seen that resilience play through. And by having a diversified fleet around the world, you've got airlines in the US and Europe that are back performing well, and as we said, paying, but also many, if you've got government credit airlines in China and the less who are still paying, that as long as you don't have an overexposure to struggling airlines, then the lessors have had very little difficulty funding themselves and their cash flow basis, which it's ultimately that's what the debt capital markets will look to, is your ability in what is really one of the worst crises that this industry has seen, that the lessors have been able to successfully navigate that. That's really the real test that they're looking for, as to that essentially they're going to get their debt repaid, right? And because of that, I think the lessors will continue to be rewarded as sophisticated borrowers that are with their investment grade ratings have proven that they're able to continue to perform and to repay their debts, and therefore benefit from the lower interest rates that come with that.
And looking at the wider leasing market, you have the IG rated lessors who can tap that piece. You have the likes of yourselves who have very strong balance sheet support from a parent. You end up in the haves and have nots. So those that can access funds in this type of environment very cheaply, and those that maybe have to look at the more traditional debt market, are they going to be priced and squeezed out of the market? Or what are your thoughts on happen to those that can't access that parent capital or those unsecured bond markets?
Yeah, and I think it's been somewhat always that way, that even in the past, that if in a recourse facility, if you had a quality mix of credits that had a low risk of default, you'd benefit from lower interest rates, but equally you clearly had a lower yield from those assets because they had less risk. And certain lessors, that model worked for their shareholders and their business plan, whereas others were seeking to pursue higher yielding strategies that meant they had to move down the risk spectrum, and therefore would pay higher interest rates, and at the same time would need to essentially move down the risk spectrum. And I think it's going to be the same, that absolutely, if you don't have access to investment grade debt, you're automatically going to need to do aircraft that have a higher yield to be able to sustain a higher debt, which means either older assets or higher risk assets. Obviously, the ABS capital markets has been a very, very valuable tool for those players to be able to access reasonably competitive priced debt for those type of assets that wouldn't have been available in the traditional bank market. And I think you'll see that. That's why you'll continue to see that market continue to be buoyant over the next number of years.
Were you surprised at ABS at how quick it came back? If you think back to the market shutting and the financial crash in 08, 09, you're probably 4 or 5 years before a meaningful return. Whereas already, I think we're up to a dozen deals this year, or we won't be the 10 billion of assets that was there in 19. was there, yeah, in 19, but it's been a real and meaningful return. All right, maybe not around the tradable e-notes just yet, but it have you been surprised at just how quick that market has come back in a meaningful way?
Yeah, to be frank, yes, it did surprise me. Having said that, when I talked to kind of some of the investors in that space, their answers were on a comparative basis. The kind of the yields they could get from aircraft ABSs were kind of at a premium, and relatively speaking, given the resilience we've seen of those ABSs, that the kind of the cash traps have worked, the waterfalls have worked. That while there was a period of time that the funding was the fund flow was challenged, that with the recovery in the sector and airlines flying again, that even kind of the most challenged ABSs have been performing under the kind of the expectations of the restructured workings. So I think that's their answer, is that on a relative basis, aircraft ABSs are still attractive to them, and therefore that's why they were kind of willing to move back into it quickly. And I think also the first couple of transactions that were done in a way that had kind of, I suppose, they were probably more investor debt friendly terms than maybe pre-COVID, which was a good way to get them back in. And now we're starting to see kind of, I suppose, the pre-COVID terms come back more so. So I think it was kind of some clever transactions done by the investment banks ultimately in the first few deals that got the investors back on board. So,
and can I ask on around the maybe M&A and consolidation point? What we have seen over the last 10 years is probably a breakout in concentration. So the top players holding less of the market, but leasing just owning more of the market. We've seen a trend line, obviously, start of the year with the AirCap transaction. We might come back to Superscale in a moment. And now we're a couple other deals at the outset of the year, but probably a couple in the hopper now, right? And as I say, as we record this in the end of December, we'll see what follows through over the next few weeks. Do you expect to see more consolidation over the course of 2022? And ultimately, over the medium term, do you expect a greater contraction with fewer lessors holding more of the market, which kind of goes against the trend we've seen over the last decade?
I think there's certainly a strong appetite for consolidation and for growth in many of the lessors, especially in the top, let's say, 15. However, there's actually very few sellers in the top 15. Almost all of them are trying to grow their book. So therefore, I think, and we're starting to see that there's, some of the rumored consolidation or acquisitions at the moment are kind of the lessors from 200 aircraft and below, because that's what's available to be bought, essentially. And I think we're going to see that absolutely continue, where there's either opportunistic sales or a change in business strategy that will allow some of the top 10, 15 lessors grow their book. But I think all of them would love to buy a big lessor. I just don't think there's very limited availability for that. In terms of the size, obviously the AerCap GCAS lessor at over 2,000 aircraft, which then the next in Avalon being number 2 with 560 aircraft in its fleet, an order of whatever 250 aircraft, and then kind of really everybody from 3 through 10, 12 pretty much bunched in a relatively small band of kind of 300 to 500 aircraft. That's kind of, I don't know whether that's kind of not sustainable, but I don't know whether it is kind of sustainable that some of the other lessors need to get to kind of 1,000 aircraft as the percentage of the fleet being leased grows, as the number of aircraft in the world grow. I think you will see, probably, if you follow the trends, essentially you needed to double every 5 years and to hold your position within the leasing space. And I think that'll probably continue, other than for aircraft GCAS. I can't see them going to 4,000 aircraft, but I can certainly see that kind of the top five, 2 to 5 lessors reaching 1,000 aircraft in the short term. Whether that's through acquisitions of other platforms or quite possibly just very aggressive acquisition of assets. Because I think we're kind of, while we have a competitive space right now, I think as most of the airlines start to get back on stream, really probably from 2023 onwards, and their order book, the order streams are back flowing at full capacity, then I think you're going to see a lot of airlines move to the sale-leaseback channel, either for existing aircraft in their fleet or new order deliveries. And I think that's going to be the big opportunity maybe for some of the lessors to move at scale without an M&A transaction.
And if you look at who will fund those transactions or fund those lessors as they continue to build out those balance sheets, have you seen trends? And obviously on the asset manager side, you talk to a lot of investors that come at this space. Have you seen trends on the type of capital that has departed or entered the space in a post-COVID environment? Or is it still the same broad categories around US private equity, particularly interested in your thoughts around Japanese capital in the moment? But have you seen trends that have been driven by COVID, or is it the same type of investor base that continues to show an interest in the space?
I think, to be frank, it's probably the same type of investor space it is. It's large private equity firms, it's insurance money, and it's large financial institutions. So really anybody with kind of long dated funding requirements who's looking for kind of an ongoing yield with a US dollar asset that's a global asset. Aircraft is probably one of the best places to be, both because of the the large capital that could be put to work relatively quickly and efficiently, the stable dollar base, and your global customer base. So it is appealing for, as I say, kind of financial institutions, insurance companies, and private equity, and that's no surprise, I guess, as to why they're the ones leading the charge in providing capital into the industry.
And on the Japanese side, obviously, look, that decades-long relationship with ORIX Corp, and the JAL market, which you've played extensively in for a very, very long period of time. Japan has a very, very long relationship with aviation finance investments and would be sticky in that piece, but conservative by their nature, right? So interested in your thoughts over how Japanese investor behavior has evolved maybe over the last 20 months from the initial shock.
Yeah, I think generally speaking, you're correct in the kind of somewhat conservative, risk-adjusted view of the world, that there was a general pause to see how things played out. So until the vaccines were actually kind of announced and rolled out, there was definitely a general let's wait and see whether this is going to be a short-term effect or a very long-term effect, rather than kind of opportunistically taking a position on how it would play out. As is typical, and most of the Japanese, both firms and investors, have been involved in aviation for quite some time. So there was also no panic, in the sense of there was no kind of looking for kind of distressed sales, or in fact, and also they generally were very cooperative with the airline requests around forbearance, as they understood that this wasn't a kind of a typical recession caused by lack of demand, that this was essentially a unique pandemic-driven or kind of government-led blockade of travel. So therefore, the airlines couldn't do anything about the situation, and that once things recovered, that people would fly again. So I think that definitely has played out. And now we are seeing more investors come back to do transactions on the JAL side, albeit even more focused, I guess, on very good credits. But they've definitely moved away from kind of some of the potentially riskier developing nation airlines back to kind of the more traditional successful low-cost carrier or kind of financially strong credit. So that's really been the shift, I think, is it's shifted the needle back to lower risk airlines than had started to evolve over the last number of years pre-COVID.
And maybe moving from investors to the metal side, and I'm curious to your thoughts on, as you assess opportunities right now in the market, where are you thinking that sits on the metal side? Obviously, look, we know the challenges that are there on the wide body piece, but there's cargo, right? So interested your thoughts around that. And is it just narrow body, new tech, narrow body, new tech? I know is kind of the mantra we'll hear back. But what opportunities, or where do you think the most investable aircraft will be over the next couple of years?
Well, certainly narrow body new tech are, I think, the most investable. There's no question about that. They are the most in demand. They are the most fuel efficient. It's what airlines ultimately want if they can afford them. However, having said that, obviously there is significant opportunities, especially actually I think on buying naked aircraft or off lease aircraft. If you have the patience and the capability within your company to be able to move those assets, obviously it may take some time before the market is recovered enough that there's widespread demand. But I think people who are willing to be with patient capital, there are some distressed opportunities, I guess, from some of the post bankruptcies or some people exiting the space, that there's definitely a opportunity there, but it's not for the faint-hearted, and you need a really very experienced platform to be able to handle those type of transactions. And then obviously I would say that there's certainly wide bodies are out of favor, even on lease new technology wide bodies with good credits, which is a bit I wouldn't say illogical, but it means that it's like if you've got 10 years remaining with the blue chip credit on a new tech asset, really it shouldn't be kind of as unpopular as it seems to be at the moment. Clearly naked wide bodies are difficult because, as we know, airlines generally are not, it's the long haul market is going to be the longest to recover, and airlines have plenty of aircraft and wide bodies in their fleet that are not flying, that they're unlikely to take on additional wide bodies for some time. So I think certainly no wide bodies off lease are the most challenging, but sometimes the most challenging is also can be a very lucrative opportunity. Again, if you have patience, and I think you're seeing some kind of private equity hedge funds taking that position and saying that they will buy these naked aircraft, store them for a period of time, and then if the market recovers in the same way it has in previous cycles, those aircraft will then have a high demand and a high income stream available.
And picking up this, one of the points then around that is cargo, where we have seen probably spiky trends in cargo pre-pandemic, and now it looks like growth and maybe sustainable growth as we move to maybe a more prolonged engagement with e-commerce. Your thoughts on cargo and whether or not that's an opportunity on the lessor side, or is it fundamentally different to passenger aircraft in looking at it from a leasing perspective?
No, I don't think it's fundamentally different, and I think it is certainly an opportunity for a portion of the fleet. But it's a little bit of a niche product. It's certainly a good outcome for either some older or midlife assets that by putting them into a cargo program, you'll prolong the life of those assets. And typically, the credit worthiness of the airlines that lease the cargo planes does tend to be of a better quality, or to put it a different way, I guess, new aircraft tend to go with good credit airlines. Midlife or older aircraft tend to go commercial aircraft, passenger aircraft with older assets. However, with cargo, obviously, they tend not to be converted until their mid or late life, but still they will go on lease to very good credits. And that can be very attractive, obviously, then for lessors, that not only are they kind of continuing the economic life of the asset, but they're doing so with a very good credit, which gives a long-term income stream.
And maybe shifting gears a little bit, James, around an area that is obviously going to be hugely and only more and more important as we go, and that's the climate change agenda and its impact with aviation. There's hugely optimistic targets and challenging targets that are set about how aviation will achieve net zero. How realistic do you think those targets and timelines are? And what do you think are the real tools and building blocks that are going to get you in any way to what those targets are?
Yeah, I think certainly the targets are ambitious, but they have to happen. I mean, there's no doubt that ultimately we all and the industry has to get to net zero by 2050. The ways of doing that are going to be, I think, phased based around the technology of what's available. As you know, there's clearly in the short term, the technology does not exist. The engine manufacturers have said it, that they don't have the technology to drastically improve on the current generation of new technology engines. So in the short term, I think SAF is clearly going to be one of the absolute tools available to the industry. And whether that synthetic fuel is, synthetic or sustainable is something that's going to play out as well. I think that obviously a lot of it has to be more synthetic in style, or reusing existing oils that have come from the food industry or the auto industry, whereas obviously using land, arable land, to try and make a runoff fuel for aviation is not ultimately sustainable. So I think it's going to be a synthetic aviation fuel that is the future for the next, let's say, 10 years. Obviously, both ourselves and Avalon are involved with the vertical eVTOL aircraft. And while that's not going to replace commercial passenger aircraft itself, it's a part of being a thought leader and developing a technology that will eventually move into the larger commercial aircraft space. And eventually you'll see, I think, battery technology being used in aircraft, maybe in the early stages for certain parts of the journey, whether it's in flight or whether it's at the airport on the ground. But for kind of takeoff and the like, it seems really that it's many years before the battery technology will be there to be of a size that can make that effective. So I think it's going to be kind of a phased basis. And also, I mean, the thing that's a bugbear of mine and others in the industry is air traffic control. So air traffic control, as we know, has a 10%, you can cut emissions by over 10% almost immediately if air traffic control is made more efficient. And kind of direct routings are available, especially in places like Europe, where you've got individual countries with governing airspace and lots of fly-arounds needed, but the same with military airspace across China, across Middle East and the like. There's huge inefficiencies of connectivity that could be vastly improving fuel efficiency by kind of correcting the use of air traffic control and coordinating and linking up that. So I think all of them are bit by bit going to form part of it, but I think ultimately it is a long way off because there is no technology available. And as we know with aircraft, it takes typically 10 years from the point of even almost announcing a product to it being in production. And then when it's in production, it typically is another 10 years before at least 50% of the incumbent fleet is actually more than with the new product. So it can be a 15 to 20 year kind of transition, essentially, from product announcement to where more than 50% of the fleet is replaced by this new product. And on the basis that we're many years away from the manufacturers announcing a drastically new product that's going to be more fuel efficient, I think the interim is going to be around obviously new technology, existing technology, new technology aircraft, SAF, efficiency of air traffic control, and the likes. So
as you say, and that's clear, you take those building blocks, you see with SAF, new tech, probably offsets playing a part. As a lessor, right, or within aviation finance, is this feeding through to your business now, right? Is it actually putting any basis points on a debt piece? Are investors coming to you and saying, James, I don't like that portfolio, or I'm worried about, a brown type investment because aviation will never be green? Is it having a real impact, you feel, on lessors now? And if not, how soon do you think that worm turns?
Yeah, I think it being realistic, it isn't having a lot of an impact on lessors right now, partially because it's a case that there isn't alternatives. And also, it wouldn't be very environmentally friendly to just replace all the existing aircraft that are in operation today with new aircraft, because ultimately that's wasting a huge amount of resources that are viable to continue to operate, especially if done with new SAF fuels and the like. So I think there is a realism out there within the finance community as well, that while this needs to shift, there's very little that can be done in the short term. So I think it's probably a few years away, in the sense that if people make a decision in 10 years or 15 years time, not to use alternatives that are available, or not to support alternatives that are available, then I think they will start to see essentially a consequence of those decisions. Whereas at least probably certainly in the next 5 years, I think the lack of alternatives will mean that people won't be punished, I guess, in terms of their position, because they can't do anything alternatively. But also, don't forget, a lot of this is still ultimately an airline's decision and a passenger's decision that the lessors can't control either. That to a lot, we can all be part of a solution, but we can't ultimately kind of replace aircraft overnight with electric aircraft, because they don't exist. And if people do want to fly and do need to fly, so therefore, it's something that's going to continue for a significant time, until technologies can adapt.
And I think that's all very clear. And I think you're right. The message management piece as well, around how all these things are happening, probably could do with better communication as a sector as a whole. And can I ask you, Jim, just in closing, as you look out into 2022, what are your optimism levels like? We've had an incredibly challenging 2021 months, and sometimes you feel it's 2 steps forward and a step and a half back. But as you look out into 22, how optimistic are you, both for the wider sector and then your own business?
I think certainly for the wider sector, I would be very optimistic. We've seen airlines, and the passenger recovery has been very strong when restrictions were lifted. We've seen that in the US and Europe. Asia really hasn't got to that point yet, but it's going to get to that point hopefully in springtime. So I actually do see a lot of optimism around recovery in the Asian and Southeast Asian market, which would be great for everybody. Airlines are undoubtedly positioning for recovery. The demand for aircraft has increased, lease rates have increased, number of stored aircraft has drastically reduced. Airlines are nearly back at about 89% of pre-2019 numbers are back in service. So there's huge room for optimism, I think, in that people would still want to fly and will fly. Obviously there are going to be challenges, and high oil could be one of them, and indeed continued new variants coming out, and start lifting and closing of restrictions will mean passengers people will only book last minute, which will make it difficult for airlines to plan. So there's undoubtedly going to be challenges, but I do think overall a positive 2022. For our own business, equally, our own customer base is a lot of the best credits in the world, that they've continued to be successful through this. We have a lot of very strong Japanese investors that are looking to add aircraft that we will be working with them on, and we're seeing kind of our fleet as we roll off aircraft roll off lease. The demand for our midlife narrow body assets has been strong, and we're seeing Avalon really successfully grow out of the last couple of years as well. So I think overall it's been a tough 2 years for everybody, but I think we're finally going to start to come out the other side in a much stronger position than certainly this time last year, that's for sure.
James, I'd like to thank you very much for your input and insights, and I wish you and the team at ORIX a very successful 2022. Thanks for your time today.
Thank you, Joe.